Be Wealthy and Smart, episode 1025.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, I'm going to give you 7 reasons why I'm bullish on stocks right now. Now, there's a lot of doom and gloom out there. So many people are predicting terrible things for the economy and the stock market, but I'm not seeing that. I'm seeing actually the opposite, and a lot of the bad news is behind us. So today, I'm going to explain why I think we're seeing the end of this very horrible bad correction that we've been through. I think the bad news is priced in already. I think earnings are strong, and I'm not seeing a recession either. So let me start out by telling you there's 7 things that I'm looking at that are strong indicators telling me that stocks are about ready to take off. Number 1, interest rates are still low, even though 5% is higher than it was a year ago when I was telling everyone that they should be refinancing back then. I hope you took my advice. And now 5% seems so much higher. And of course, payments are larger, etc., at higher interest rates. But 5% is still historically low. And as long as interest rates are staying low, the housing market will stay strong. There's limited supply in housing, and I think with low interest rates, lack of inventory, the housing market, as you know, I'm predicting is going to be strong for about 2 more years before we have a sharper correction. Also, I'm still saying my original forecast of 1 quarter point hike in the first half and 1 quarter point hike in the second half is what the Fed is actually going to do. Now they're out there jawboning about how they should raise interest rates by 3.5% and how they should do this very quickly and all of this, but that jawboning actually does move interest rates just by them talking about it. They don't actually have to move the rates, and there's a lot of reasons why they can't actually move the rates. So they'll talk about it, but they're not actually going to do the hikes. And I'm standing by that prediction. Number 2, we have the COVID economy opening up. Recently, we heard the judge in Florida said no more masks on planes, etc. So people that maybe weren't traveling might start to travel. People might feel a little bit more confident traveling. Some of you might disagree with that. I understand there's differences of opinion, but I do think we're seeing the COVID economy really start to open back up in a full opening way. Not just a little bit here and some there, but a full wide-on reopening of the economy. And we're going to see that trend continue into May. Number 3, I believe oil prices have peaked. We've seen the worst of it. Looking at charts and all of my information, it looks like oil prices have peaked here. So I would expect oil prices will decline and continue to decline into the second half of next year. Number 4, I think in May we could see some peace talks and maybe even a settlement between Russia and Ukraine. I also think that's going to provide some impetus for not only continued strong earnings and low interest rates helping to boost stocks, but also that good news surprise is going to cause a relief rally that's going to rise into the end of May and early June, bringing us to new highs in the stock market. So it's a good time to hold and buy on any dips, but I really think we are going to see new highs by late May, early June. Number 5, bearishness is at its highest level in a very long time. Optimism is at a 30-year low. Bearishness is actually at a 48% level. Neutral is 36.7%, and people who are bullish is only 15.8%. So I think that we have a lot of people thinking things are going to get worse. A lot of people are talking recession. I don't see it. And the reason I don't is number 6, the consumer is still spending strong. 70% of the economy is made up of the consumer. They're still spending with low interest rates, with housing prices buoying their net worth. They're feeling flush with cash, and they are spending. So sales are continuing to be good, and the economy is strong because the consumer is strong. And finally, number 7, I think technology is still going to lead the market because interest rates are low enough that growth stocks are going to lead. Earnings are going to be good on those companies, and we're going to have the same kind of market that we've had the last few years with technology really leading the pack. So for all of those reasons, I am extremely bullish on stocks right now. This is a contrarian view to what many people are saying, but I've often been contrarian to what many people say, and that has worked well for me. So again, my reasons are interest rates will stay low, the COVID economy is opening wide up, oil prices have peaked. May is going to usher in possible peace talks or a settlement with Russia and Ukraine, which will cause new highs in the stock market by the end of May or early June. Bearishness is high. Optimism is at a 30-year low. The consumer is strong, and tech is still leading the pack. For all of those reasons, I'm bullish on stocks. Buy the dips. Hold on strong. We are going to see a very surprisingly sharp rebound that is going to take markets higher than people expect. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.